Welcome back. If you're trying to get a sense of what's happening between the British pound and the US dollar, you're in the right place. We've taken a good look at a recent market update, really trying to pull out the key insights for the GBP USD pair over the next, say, 3 months. And right off the bat, it seems like the pound's looking pretty strong.
That's right. Yeah, the update pegs the pound trading at around 1.3250 gets a dollar. And what's really notable there is, well, that's its highest point since last October.
October, wow. Okay, so that definitely gives us a clear picture of the current momentum. Let's dig into that. What's actually, pushing the pound up like this?
Well, the analysis points to a couple of key things over in the UK. First, the economy is described as holding steady. That's generally
It's
positive.
holding steady, okay.
Yeah, and we're seeing unemployment staying low. Plus, and this is quite important, the latest numbers show core inflation actually decreasing.
Ah, so underlying price pressures are easing off a bit.
Exactly. And that easing gives the Bank of England, potentially a bit more breathing room, more flexibility when they think about interest rates down the line.
Right, that makes sense. A stable base, cooling inflation, good foundation for the currency. So, what about the other side of the pair? Why might the dollar be maybe losing a bit of ground?
That's a crucial part of the story. The sources are definitely highlighting growing speculation over in the U.S. People are starting to think the Federal Reserve might actually cut interest rates later this year.
Okay, rate cuts. And how does that typically play out for a currency?
Well, generally, if a central bank cuts rates, it can make holding that currency less attractive for, say, international investors seeking yield. So it potentially leads to downward pressure on the currency's value. That anticipation is definitely a factor here.
Got it. So, UK stability versus potential US rate cuts. That sets the scene. Now, this update gives specific numbers to watch, which is always helpful. What about the upside? If the pound keeps climbing, where might it go?
Uh-huh. The analysis suggests that if this positive momentum holds, the 1.3430 level could be tested fairly soon.
1.3430. Okay, near term.
Yeah. And then looking a bit further out, if things really line up positively, there's even talk of a potential push towards 1.42.
1.42. That would be quite a move.
It would be, yes. It's presented more as an aspirational target if the trend really gathers steam.
Of course, we need the other side too. Markets can turn. What are the key levels on the downside that might signal trouble for the pound?
Good point. The report flags 1.3120 as a level where we might see a dip, maybe some support, but a more significant level to watch would be down around 1.27.
1.27, and what would that signify?
A drop to that level, according to this analysis, would be a stronger signal. It could mean the current upward trend is running out of puff or possibly even starting to reverse. It's a key warning level.
Okay, so putting all these pieces together, what's the overall vibe for the next 3 months from this update?
The general expectation outlined is that the pound is likely to stay relatively strong against the dollar for the next quarter. But, and this is a really important but, that outlook assumes no major unexpected economic shocks hit either the UK or the US economies.
Right. The standard disclaimer, but always crucial. Things can change fast. So, for our listeners trying to keep tabs on this, what's the absolute key thing they should be tracking?
Oh, without a doubt, it's news related to interest rates. Keep a close eye on announcements and even hints from both the Bank of England and the U.S. Federal Reserve.
So, central bank communications are paramount here.
Absolutely. The update specifically says that shifts, or even just strong signals about future rate policy, are the most probable drivers for this currency pair going forward.
Okay, let's quickly recap then. The big picture suggests a bullish outlook for the pound versus the dollar over the next 3 months or so, driven largely by a UK economy that's holding up, maybe better than expected, with inflation cooling. While in the US, the market's pricing in potential Fed rate cuts, which weighs on the dollar.
That sums it up nicely. You've got those diverging economic signals and, crucially, the differing interest rate expectations.
Right.
And, thinking about those rate expectations, it makes you wonder, beyond just the central bank decisions themselves, what other global economic factors, maybe geopolitical events or broader market sentiment shifts, could potentially reinforce this GBP-USD outlook or perhaps completely challenge it? Something to think about.